Hey everyone, BigBear.ai reported quarterly financial results after the markets closed on March 7th. So in this video, I'm going to review those results. I'm also going to update my recommendation of BigBear.ai stock. Coming into the quarter, remember, I cautioned investors not to buy this stock. I warned investors saying the stock was too expensive, too speculative, because of the AI wave and the popularity of artificial intelligence. This stock had seen an increase in valuation. So now that the stock price is down 25% following these earnings results, is it time to buy? Well, I'll update my recommendation at the end of this video as well. So let's jump right into the results.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, BigBear.ai announcing that it successfully closed the acquisition in an all-stock transaction combining facial recognition, image-based anomaly detection, and advanced biometrics with a BigBear.ai's computer vision capabilities. The big thing to note in this transaction is that it was all stock. Typically, when companies make an acquisition with all stock, it signals that they think their stock is maybe overvalued. Certainly, they don't think it's undervalued. Otherwise, they could have chosen to pay in cash instead of paying in stock. Now, this is just a general statement. It doesn't mean that this case specifically is what BigBear.ai is thinking, but just in general, when companies use stock to make an acquisition, it could be that they think it's overvalued. Some good news here in that the second half of 2023, the company was cash flow positive. That was the first time since it was a public company, debuted in December 2021. And the company issued a 2024 revenue outlook in the range of 195 to 215 million. And I think that guidance disappointed investors. It's one of the reasons why the stock price is down 25% as of this recording. Let's see if that updated number is even worse or it got better. 26% down now as of this recording in the after hours following the release of BigBear.ai's earnings report. Some more financial highlights. Revenue in the quarter was relatively flat, increased only 0.5% to 40.6 million compared to 40.4 million in the same quarter last year. And the net loss on the bottom line was 21.3 million for the fourth quarter, so a roughly negative 50% net profit margin. Not very good. Not very good, especially if you're not demonstrating any growth. The company's ending cash balance of 32.6 million as of December 31st was an improvement from 12.6 million as of December 31st, 2022, but it's not because the company earned this cash. It's because of a deal where the company got some cash for the exchange of some warrants, and that boosted its cash balance. So the disappointing part about BigBear's revenue wasn't just that the revenue growth is not apparent for 2024. It's that the revenue number includes the results of the acquired company Pangiam as of February 29th. So when you acquire a company and you include their revenue along with yours, you're increasing your sales because you're including another company's sales as part of your own. You're not organically growing revenue from your own sales. You're not organically increasing your business. There is no demonstration of increased demand for your services. And so that's why I think investors were not too happy with this outlook from BigBear.ai. Because if you look at it, revenue for 2023 came in at 155 million. So if they hit this target, let's say 200 million, that would be an increase of about 45 million or roughly 33%, which would be solid revenue growth for BigBear.ai. But because it's going to include the results from Pangiam, that's what makes it a little bit less impressive. Additionally, the company barely demonstrated any improvement in operations. So the operating loss of 8.6 million compared to 26.3 million in the last quarter, it might seem like they improved their operating performance by 18 million year over year, but if you take a look closer, they had a goodwill impairment of 18.2 million in the same time the prior year. And so if you exclude that from last year's results, then year over year, it looks the same. If you add that 18 million back to this last year's results, then last year they would have had an 8 million operating loss roughly. And this year they had an 8 million operating loss roughly. So little improvement shown from the business year over year. And another reason why investors were not too thrilled with the latest results from BigBear.ai. Although management did say that they had to take some tough steps in 2023 to get the business in a position where it can return to growth and be in better position. They restructured some contracts. They didn't renew some contracts that the management team said were not in its favor. And so now it's in a better position, according to management, going forward. Well, that remains to be seen if they are indeed in a better position. And we'll see that throughout next year if they do indeed perform better than what they're forecasting. And another thing to note here is they are diluting shareholders aggressively, especially after this all stocks purchase of Panjim. They now have 156 million weighted average shares outstanding. That's up from 127.8 million in the same quarter last year. That's an increase of roughly 30 million shares, or about 25% dilution. This is important because if or when the company becomes profitable, the earnings per share is going to be lower because the number of shares outstanding is going to be higher. You're splitting your profits with more shares, and so there's less earnings for each share. So that's also disappointing for investors who are not seeing growth in sales. They're not seeing growth in profits, but they are seeing their ownership get diluted. So not good there either. And finally, looking at valuation, it had gotten stretched. Look at this boom in valuation in recent weeks for BigBear.ai. That's why when I made the video telling investors that the stock is not a buy, in my opinion, this is what I cited. I cited an expensive valuation with limited growth and losses on the bottom line. It had increased from a forward price to sales of around 1.2 all the way up to a forward price to sales of around 3.5. Even after this dip following the earnings release, the price is still elevated at a forward price to sales of 2.95. So still, even after these earnings results and even after the stock price drop, I would not recommend the BigBear.ai as a buy. Not yet. I would wait to see more progress, and I would hope for a better valuation in buying BigBear.ai stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.